All right, so a lot to talk about today. We saw quite a bit of downside on both the S&P 500 as well as QQQ to actually close near the bottom of the range we've been trading within for the past like 5 or 6 sessions now. And what's interesting about the downside we saw today is we had a bounce right off the trend line that I referenced in the Sunday video. This is a very nice convergence of both the golden pocket based on Fibonacci, this green color in the middle here, as well as this blue trend line. This is the trend line that goes all the way back to the October lows and connects to the March lows, so very critical upwards trend line. So you can see here October lows of last year as well as the March lows from previously this year, and we did just retest that by the end of today. And what personally I'd like to see is one more day of similar sell pressure where we actually wick below this trend line again. I'd be very bullish if we were to wick below the trend line, especially on the daily chart. And by wick, I mean similar to what we saw here on this 1 hour candle, for example. We have a lower wick that shows that there were buyers present at lower prices, and it picks up by the end of the day to close above this trend line. That'd be a very nice flush scenario. It would liquidate a lot of people out just because we would fall below earlier in the session. The VIX would likely spike with that, and I'll also reference the VIX later in this video, but it would definitely worry some people, and you would see some more bears enter their position if we did fall under it intraday, followed by potentially a pickup afterwards. Because remember, this is a very supportive area, specifically between 427 to roughly 429. So this is the range that I'm looking at potentially buying at least tomorrow on Thursday, potentially Friday, as well as Monday. I actually have a reversal date on Monday of next week. So preferably we would have some type of chop / downside into Monday of next week, and then I could buy that dip. That'd be the best case scenario, but timing can certainly be difficult. And the first thing I'm going to look at is price, of course, like I typically do. So if we are within this range within the next couple days, I would be interested in buying. And by buying, I mean I'm looking for a long entry to hold into the rest of the year, potentially even January as well as February, so Q1 of 2024. This is the pullback that I've been waiting on. I referenced this in the last video. I wanted to see a pullback a little bit lower here as well as on QQQ to make the potential curl setup. Now, since we are about where this curl setup should bottom, I would like to see potentially, again, like I said, one more day. We do have a lower wick, 360 would be great if we wick to that, and then have it pick up afterwards, because this is a very supportive range. Now, of course, with trading, everything's based on probability. So if this range is unable to hold, specifically the lower end around 426, then we would see a lower low form. That does not negate my end of year rally thesis. I want to make that clear. However, the best risk reward in this case is adding longs around here. That's what I'm personally going to do. I would cut if we fell below roughly that 426, maybe 425 at the lowest, and then it would enter back in again around 415 to 417, which is where the final bottom would be if we were to flush through this range. But as of now, the best risk reward and the highest probability bounce spot that I see at the moment is around this range where we are. So I will be looking to buy if we do see a couple more red days here in the future, specifically if we get into that Monday time range for my reversal date. But something interesting from today, the whales definitely caught quite a bit of this downside move. You can see from the beginning of the session, we saw quite a bit of puts, at least in terms of premium. We had a $3.3 million one here, the $3 million one, 1.9 million. You could see just quite a bit of these sweep orders. Some of the ones that are calls a little bit lower down, whether they have a lot of expiration, one, or they're just split or block orders, which don't hold as much weight, in my opinion, compared to consistent and aggressive sweep orders with a lot of premium like we saw for QQQ as well as SPY, as you can see here. So they were entering these earlier on in the session. We just continued down the entire day. There was even a point where they were just adding at low of day and price kept falling after that. So quite a bit of put buying, especially early in the session. And then as we go up, you can see the green here. These aren't actually calls. These are also puts, but these were being sold. So likely some profit taking from earlier on in the session, at least those puts that they were buying. For example, here, the $3.3 million one for the 435 strike, 119.24 expiration. We saw them closing out that order later on in the day. You could see here, both of these orders, 2.7 million worth and another 2.7 million worth. We saw them closing this one from here as well as this one a little bit later on in the session. So they were profitable on those, and they kind of were jumping in and out of them throughout the day, just depending on if their criteria was met or not. but you can see over here, they bought this one a little bit later in the session too for 3.1 million in premium at $12.92. That was the price for the contracts. And then not too long later, they sold for $13.63. A decent gain, especially when you're talking about 3.1 million in premium, and only within about 20 minutes, because this came through at 1:18 Eastern and they sold at 1:50 Eastern. So a very profitable day for whales. And the flow is definitely something we're going to want to continue watching, especially as we enter this next 3 or so day period where I'm looking for some form of a bottom. Are these puts going to stop? That's definitely a crucial variable that I would like to see. At least there's a slowdown in overall puts, maybe even calls or call buying. They can definitely be a variable of a potential bottom forming. So I will be watching for that. Also, something that I will be watching is the VIX, which I'll go over to really quickly. You can see just based on today, we closed up in the 19s, so we're back up near the 19s. This has been a previous rejection spot right around 20. This 20 level has been a rejection spot, specifically on the daily. You can see some pretty high wicks over here. For example, both of these days over here not too long ago on October 13th, and as of recent for today, we did have a wick a little bit higher. So 20 has been a hard resistance. Personally, I'd like to see a little bit of a higher high on the VIX, which would mean we'd have to surpass about 20.89, which was this high over here on October 4th. I'd like to see one last higher high where we really see some fear enter the markets before it starts to collapse afterwards. And I believe we will see quite a bit of suppression all the way back to levels that it was at all the way here in early September, back in the 13s. I believe we'll see that as vol gets compressed into end of year in Q1 of 2024. But at the moment, we're near the peak of it, or I believe there will be one last peak. That'd be ideal here. And it also would serve as a confirmation signal, at least for me, to buy up some equities, potentially enter long positions on something like the S&P 500. So I'll be looking for that. Definitely a signal. If we do get like 22, for example, 22 to 23 would be great. That would show capitulation in the markets, especially because we're almost done with bullish seasonality for the VIX. If we do get that large spike, it's not like there's going to be bullish flows supporting it much longer. So you would expect it to fall as the market, which I believe will go up into end of year here. So this should be the last hurrah basically for the VIX if it does want to take it, which would be a break to make a higher high. But after that, it should be suppressed into the rest of the year. And something we did see recently, and I referenced in the last video as well, if we go to the historical flow tab over here and go back to last week, for example, and go to the VIX, you'll see here a ton of large orders, and they were all over this. They were expecting some type of a bounce, and they were buying a bit high on these. And by the way, the spot price you see here is not the price of the VIX, for example. This is the futures price, so it depends what contract the application is viewing. So you'll see a discrepancy between the price. Typically ends up being higher for the spot price on cheddar flow compared to the actual price of VIX. So these were bought, if I remember correctly, near 17 to 18 or so when they were buying all of these contracts, or maybe even selling some of these puts. So they definitely are either hedging themselves for a potential higher spike here in the VIX, or these are directional bets, because it is very rare to see this amount of premium and this aggressive of a manner for calls being bought or just puts being sold in this case. So I would not doubt that some of these are directional bets on top of existing hedges. So regardless, one last spike in the VIX, something that I'm watching for. Will we get it? We'll find out very soon. It would have to happen within the next, I'd say, 5 sessions or so. We are really at the end of bearish seasonality here. I do expect there to be a positive trend for equities into the end of the year, like I've been referencing now. So watch for something like a break above the existing high over here from October 4th, and that'll be a great signal that we are just about at that bottom or bottoming point before upside afterwards. So that's something I'm going to be watching. And other than that, appreciate you guys watching this video as always, and I'll see you next time.